Good evening and welcome to the Daily Market Update. The DSEX slipped back to the red zone today as it lost 13.29 points or 0.26% and settled at 5,166 points. Market turnover was 3.74 billion Bangladeshi takas, which is a decrease of 12.93% compared to the previous trading day. Islami Bank Bangladesh, Pubali Bank and First Security Islami Bank from the banking sector, BBS Cables, Eastern Housing and SS Steel from the industrial sector, and Kohinoor Chemicals, Orion Infusion and Beacon Pharmaceuticals from the pharmaceuticals and chemicals sector mainly dragged the market down today. In terms of sector-wise return, the cement sector posted the highest gain of 0.56%, while the fuel and power sector registered the second highest gain of 0.33%. On the other hand, the tannery sector posted the highest loss of 0.96% today. 5 textile companies were among the top 20 losers today. Power Grid Company of Bangladesh, Islamic Finance and Investment and First Finance registered the highest gain, while Kulna Printing and Packaging, Express Insurance and Prime Finance and Investment were the top losers today. Power Grid Company increased in value today as they resumed their trading today after a record date. There is no publicly disclosed price-sensitive information for the price change of the remaining stocks. The trading volume of Energy Pack Power Generation, First Finance and Migna Condensed Milk Industries increased significantly today compared to the average trading volume of the last 3 months. There was no publicly disclosed fundamental reason for the volume increase for the above-mentioned stocks. Today's top 2 news: the Asian Development Bank has revised Bangladesh's GDP growth projection for FY 2025 down to 4.3%, lowering it from the 5.1% forecast in September last year. This slowdown reflects political uncertainty, supply disruptions, and tight monetary policies aimed at controlling inflation. The adjustment also considers the economic impact of multiple floods and the interim government's contractionary measures, which have further dampened growth prospects. Private sector credit growth dropped to 7.28% in December 2024, down 38 basis points from November, as weakened loan demand, a lack of new investments, and increased investment in government treasury bills and bonds constrained expansion. This remains way below the central bank's 9.8% target for the first half of FY 25 and slightly lower than last year's projection. High inflation has made small businesses reluctant to take on additional loans, while a shortage of adequate deposits has weakened the lending capacity of certain banks. That's all for today. Thank you.